Hi there, everyone. Cindy Leader, Lattes, and more. Welcome back. I want to talk about a term you've probably been hearing on the news the past 5, 6 months, which is when I first started hearing about it. And now it's almost daily, definitely weekly, but daily on the news, even the local news. That's why I'm like reaching out to people who don't live on the economic sites like I do. Um, it's the term the K-shaped economy. What is that? And they kind of fluff over it. Sometimes they go into minor detail, but not a lot. And it got me curious, and so I want to share it with you. So, Exhibit A. Exhibit A. Everyone's chugging along the economy, making the money they want to make to buy their kids' sports equipment, to go on vacation, to buy books and leisure, whatever they want to do. Their a new car. So when the economy's humming along, everyone's happy. Like you're able to save, you're able to do things that you want to do, have discretionary income to buy, you know, exercise weights or whatever you want to do. Okay. But what's happening now in our economic climate is something called a K-shaped economy. Hence the K. There was a gentleman who came up with this. This is after COVID. They were trying to get a diagram, and someone came up with letters of what the economy recovery would look like after COVID. Did it look like a V? Everyone's normal, then it's not normal, it's COVID, now it's back up. Or a U, we're kind of like working our way up slowly, not as harsh. But what's happening now is that people who are, if this represents everyone's doing fine, this is representing um the upper part of the K, and I'm going to show a real diagram, not a school teacher diagram. The upper part of the K represents people with wealth who have a higher income and who are seeing their wealth continually rise in these times. And the bottom part of the K represents the lower income who are really struggling. We've seen this, groceries are not getting cheaper. I can tell you also, um, you notice, and especially when you are middle or lower income, you're noticing it more. Those Tyson chicken tenders that were 450 are now 530. All of that makes a difference when every penny counts. So let's talk about light. Let me show you a real diagram now, and we'll dig deeper into that. So as you can see here, my diagram, there was a line down the middle. Everyone is doing well, but what's happening is this gap is getting bigger, hence the K, okay? These are, and this is just after this, again, I had mentioned COVID. This really happened to these four segments after COVID. Jobs and wealth, income, it's five segments, and education. Um, People who are in these businesses and have this education and are on this platform are doing better. Okay. They're making more money. They have homes. Their homes are growing. Where down here, you may not have a home. You may just be renting. You're not sure when you can get a home. Some subprime borrowers, um, if you don't know what that means, it reflects your credit score. If you're subprime, you're below the good. You're right at the edge of the good credit score. Five. I should have researched that. 560 or 530 and below, something like that. You may not have a college degree. Um, You're feeling it right now, and the gap is getting wider and wider, right? The gap between doing well and struggling is reality. Everyone's like, woohoo, Bitcoin, I have Bitcoin. And you might be down here going, yeah, I gotta put food on the table. I don't have the money to buy Bitcoin, any Bitcoin. You were more educated about it. I'm just working my job, dude, working my 9 to 5, bringing the kids to soccer practice. You're, in the Cayman Islands talking about money. There's just a difference. There's always been a difference. And that difference now in this economy is really pushing those people rapidly ahead. Okay. Someone that I follow called, and this is harsh, called the difference, the winners and the losers, the haves and the have-nots, the doers and the can'ters. Not that they don't want to do, they can't. This is our economy, and I know you hear it, I know you feel it, I know you're living it. Um, we're all aware, so I want to make you aware of this term. Um, and there's two other parts that I want to talk about. Um, so we have our inflation rate currently set at 2.4. Our goal for the country by the FOMC, the Federal Open Market Committee, is the one who sets the inflation rate. They manage it for us to make sure we're not going crazy, and they helped us out during COVID and that inflation isn't going to go skyrocketing. It's their job. I won't get into all the glory of it, but they manage the inflation rate for us. So our goal for the US is 2% inflation because that would be more manageable for every Tom, Dick, and Harry, not including the upper class. Um, but I pulled some figures for you, and this is from Bank of America data from early 2026. Middle class income workers grew an average of 1.2% a year. Middle class. Lower income wage growth was 0.6%. So just a little over 0.5%. Well, that's not going to help you get ahead if the inflation rate is 2.4. You're not going to be able to get ahead. Things are going up and you can't catch up. 0.6%, 1.2% is not 2.4%. That's doubled. It's literally doubled. You can't get, it's going up, but you can't catch up. Okay. And the upper class is growing at an average of 3.7%. So they're able to have that extra income, make that extra money, buy those assets. Stock markets, all-time highs. Okay, who has stocks? So many people don't have own stocks. Oh, everybody owns stocks, dear. That doesn't help the majority, 90% of the country, that doesn't help. The 10 percenters are buying their yachts. I don't know what they're doing. Buying their stocks, buying their Bitcoin. Um, so you're gonna have a hard time catching up. And the gap is just getting wider, that K-shaped economy. And the other thing I wanted to say, middle class. Oh, the middle class is 1 to 1. Oh, no, that's not true. So what that means is that the cost of living is rising faster than we can keep up with it, right? Um, yeah. So the last thing I wanted to say is, in this country, we do have safety nets. I heard some news organization recently talking about a safety net. I'm like, oh, what's that? We have a safety net? This, there's a safety net? Yes. So that safety net is actually, you lose your job, there's unemployment, right? Safety net, let me read my notes for you. Safety net includes things like food assistant programs. Okay. Let me back up. Uh, Safety net is services provided by organizations or the government organizations or faith-based or private sector wealth providers um, to help people when they're facing financial hardships. They will reach out and help and give the critical support that's needed. Okay. Um, it's really meant to catch people who are falling on really hard times, not able to work, lost their job, can't find a job, um, help them recover from economic distress. Okay. And those programs include services like food assistance services, healthcare services, unemployment benefits, housing support, childcare assistance, um, insurance and emergency aid. So those are all things that can help people who are really having a tough time. Um, and it matters because, we want all of us in this country to not be in survival mode, right? Um, so an example is if Susie loses her job. Right. She works, at who's closing in the Northeast here? Eddie Bauer. Eddie Bauer, kind of frou-frou. I never shopped there. Kind of a high-end luxury store. She works there, just at the cash register, putting clothes on the hangers. Loses her job because the stores that are mainly based in the Northeast are closing. Okay. So now she's got her kids. Now, okay, I'll apply for unemployment. Well, that only will last so long, and it's only a portion of your paycheck. So now she's having trouble making her rent, um, or paying her now she lost her medical insurance. So it's just, I think when you lose your job, it's a hard crash. It's a hard crash, and you can lose everything that you almost took for granted or didn't realize how important it was to have, like that medical insurance. So you can apply for medical benefits. You can apply for SNAP programs, food assistance programs, unemployment, and yeah, like Medicaid. That's what I was trying to say. So I'm glad that we have those safety nets in at the ready, right, to help Susie become back integrated into the working economy at some point. But it's hard. We're not fine. I just saw in the news somebody else was cutting 3% of their workforce. I mean, it's almost weekly, right? That someone is cutting a percentage. And depending on the size of the company, 3% if you have, 300,000 employees versus 150 employees, that 3% makes a big difference. But so I hope that made sense. This K-shaped economy is what you're hearing on the news. This gap between the wealthy and the non-wealthy is getting bigger. We're having some heydays in the stock market, I will tell you. Okay. But there's a growing part of our economy. You can see the gap between the rich and the poor is getting larger. And we don't want to be here. We don't want to be here. We just want to be back here. We want to be back here. So, I hope that made sense. I hope that helped. I hope you found that informative. And yeah, it's been on my mind for a while, so I'm glad I finally got this out to you. All right, I will see you in the next video. See you later.